This video, we're going to walk through finding the best strike price when you are selling put options. Now, for you to find the optimal strike price, you firstly have to understand why are you selling put options in the first place. And I kind of put this into two camps, and we'll go through each one of these two things, and then we'll head over to TradingView, look at a stock example for both situations to determine what the strike price should be. So the first reason why you would sell a put option is because you are an investor and you want to accumulate shares at a lower price than what a stock is trading at today. And the side benefit of that is that you generate some premium in the process. So if that is the case and you are an investor and you're looking to accumulate shares at a lower price, the strike price selection should really be looking at intrinsic or fair value. So to understand the fundamentals of a company, to understand what the company is worth, and to pay and to select your strike price at or below the fair value of that company. And again, we'll go through an example if that sounds complicated. We'll step by step, and I've got a brand new free indicator that does this for you for pretty much any stock you can think of. The second way is that if you are a trader and you are selling put options to generate premium. Now, the stock selection in terms of the stock, I would advise that it's a stock that you don't mind holding, because with put options you can get early assigned. But the plan here is if it goes bad, you've got the ability to roll the option or buy back the option if the trade goes wrong. But if you are looking at strike price selection for trading purposes to generate premium, technical analysis through basic trend line support and resistance indicators is the way to go. And we'll have a look at that again right now on TradingView. So those are the two ways. Let's head over to TradingView, and we're first going to look at the investing way of selecting strike prices. And we're going to use Meta platforms or Facebook, as most people know. And again, we talked about what we're going to do is find out what the fair value or intrinsic value of Meta is. Now, there's many ways you can do that. You can use an earnings valuation model, which is what we'll use today, or you can use a discounted free cash flow, which I've got other videos on. But to keep things simple and to do this very, very quickly, we're going to be using the earnings model using my free indicator, the OGT intrinsic value indicator, which again looks at an earnings model to determine the fair value of a company. And you can get that, link is down below. So all you need to do is head over to indicators, search OGT. And again, I've got a number of indicators which I've got videos on, but you're looking for the intrinsic value indicator. And when you load it up on the screen, you'll get three different elements. The first one is it will tell you the earnings per share for the trailing 12 months. It will then have your intrinsic value calculations in a table format. And then what it will do, if I head over to a weekly chart, you'll see this a bit better. It will then show you the intrinsic value plotted on the chart, so you can see over the next 5 years what is the fair value of Meta based on your assumptions. And again, I've got a dedicated video on this which goes through this, but effectively what you're doing is you are putting in annual growth rates over the next 5 years, how much return you want to make, and what the PE ratio is. Again, there's a dedicated video, link is down below. But I've already inputted this, in my opinion, on what I believe this is for Meta. And what you'll see here is your low assumption, your medium assumption, and your high assumption based on your inputs of what the fair value is. So the current fair value of Meta ranges between $132 to $228. So let's say you're going with the medium assumption of $184, and you can see Meta is currently trading at $159. So in terms of your strike price, it would be anywhere below $184. So you could go very aggressive if this is what you believe in terms of you're looking to accumulate shares of Meta. Maybe you already have Meta and your dollar cost averaging in, or you want to build a position like I am. So I have a put at $155 on Meta, because even though I'm happy to own it at $159, I do think it's going to go lower. I don't think this market downturn is over. But in my example here, I've got one at $155, which again would take it to a year low as well. And again, this is my assumption here. Again, you could go very aggressive at 159 if you want to accumulate the shares, or you could go in the money, at 160. A lot of people do that as well. If you think Meta is going to go up and it will never be at these prices again if you think that this is the bottom of Meta. So that is how I would select a strike price. I would use this discounted cash flow and earnings model, use this indicator. Again, there's references and resources down below to understand more about intrinsic value. The second way is to look at is the trading ways to look at, in my view, standard support and resistance and trend lines. So if I head over to a 1 hour chart of Meta, actually let's go to a 4 hour, actually things a bit more clearer here. You can see here that Meta is in a downtrend. However, what you can see at the moment is that it has formed, this area of support. You could probably argue is a bit higher at about 159 or 157, sorry. So if I'm a trader, again, depending on what your expiration date is, and earnings is today is the time I'm shooting this video, so it's probably not the best time to be trading Meta. But again, this, in my opinion, if you're selling puts, if you believe that this is going to hold, you got three touches here. That, what's the low of this one? The low is 154. You might be looking or selling weekly to bi-weekly puts at around the 150 mark. Or if you're going for more of a longer term play and you do think that this would hold, again, the 150, 145, if you want to be safe, to give yourself some downside protection there. And that's how, again, you would use that. And again, you've kind of got this apex situation breaking out to the upside here. So in my view, if I'm trading Meta, I would definitely wait after earnings. But assuming that this holds and Meta has a good earnings and we go back up here again, you could go very aggressive on trade, potentially 3 days out up to this Friday. If things go well. If things go south, again, you can either roll it or buy it back or do what you need to do to kind of manage the position from there. But that's how I would look at trading versus investing in terms of selecting a strike price. I'll be doing the same video for covered calls at some point as well, but there's some other resources on the screen. Make sure you check those ones out, and I shall see you guys in the next video.